Hey everybody, this is Boris Schlossberg from BKTraderFx, and this week I want to talk to you about exploiting the market's weaknesses and going with their strengths. Basically, the whole idea of trading relative strength and how you can make some very, very effective, profitable trades off that concept. Just as I was telling you in the write-up of the section that those people who fight and who fight effectively always want to fight by exploiting your opponent's weakness, you want to do the same thing in the market. And here's one way you can do it. For example, I want to show you a setup that we considered. We didn't trade this because we traded euro pound and made money on that as well on Wednesday. But this is a setup that we considered on Wednesday that would have been a very, very good example of how to employ these tactics in the currency market. On Wednesday, we had the federal FOMC meeting, and as expected, the Fed cut rates by 25 basis points. Now, anybody who looks at the market would say, oh, this is dollar bearish, therefore I want to be buying euros, blah, 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 so on and so forth. That's typically a very, very novice approach to trading the market. Because remember, this information is already well known by market participants. Everybody knows the Fed cuts by 25. And in fact, the much more likely scenario afterwards is going to be a retrace rally by the dollar because all of the bad news in a dollar has already been baked in. Combine that fact with the idea that on Wednesday we had much better than expected U.S. GDP numbers, which really completely destroyed the whole idea of recession in the U.S. becoming a reality in the next 2 or 3 months. Therefore, after the GDP numbers and after the Fed cut, the intelligent approach would have been that, you know what, I don't think the Fed is going to cut anymore, and it's quite likely the dollar is going to have at least a little bit of a retrace rally, especially after this parabolic rise that the euro had. This is the euro, right? However, gambling on the fact that the euro is going to retrace may not have been the best idea, simply because you just don't know how much of a retrace, how strong of a retrace, and where the possibility of a dollar bounce could be. So looking through other charts that day, you could have seen who was the weakest pair against the dollar during the time of essentially dollar weakness. And here's the chart that I'm looking here of dollar Swiss. The whole idea is that when everybody is selling the dollar, and this is a chart of dollar Swiss, you can see that it's acting very, very poorly. It's actually not going down when news was dollar negative pre-FOMC. Here's the chart of euro dollar, which looks much stronger, basically showing you that everybody was buying euros pre-FOMC. And here's a chart that I kind of want to show you of the pound, which was just monstrously strong during that time. So having this piece of information and having this particular outlook on the currency pair, that you're going to think that there's going to be some kind of a dollar rally, but I want to basically own a currency that performed the worst against it prior to this fact, and perhaps go long the currency that performed the best against it prior to this fact. What you would probably do, looking at all these three charts, is do the following. You would go long pound Swiss. And the main reason for that, of course, is because as we saw in these charts prior, the Swiss pair simply did nothing pre-FOMC. Despite the fact that we were supposedly have to have all this negative dollar news, the Swiss pair, just dollar Swiss, simply actually stayed stationary, which means that if there was a dollar rally, dollar Swiss was going to be the one most likely to pop. Whereas the pound was very strong even post the FOMC announcement, suggesting that any kind of a retrace in the pound was going to be minuscule. So, kill the weak, buy the strong. That's the motto. That's the way things are made. That's the way profits are made in the currency market. And I'm going to just punch in here. This is pound Swiss. Let's look at it on 15-minute chart basis for the last 5 days. And we're focusing, of course, on Halloween Eve because this is when everything happened. Let me go back here. This is Halloween, okay? And FOMC happened about 2:45. We have a little bit of consolidation. Come around 4 o'clock in the afternoon U.S. time. After you'd made your analysis, after you saw the price action in the currency pairs, if you had just simply gone long pound Swiss, like right around these levels at 240.95, you see that there was virtually no retrace. Let's say we go long like right around this level. The max amount of retrace was nothing, was basically about 20-30 points of just back and forth traction. And as the pair continued to consolidate, it finally burst way up. You basically, if you'd entered here at around 240.95, within 6 or 7 hours, then what is that? Then maybe about 8 hours by the European Open, because this is the key thing. We're going to position in the Asian Open and hope that the trade really materializes in the European Open. By the European Open, this thing verticalized close to 200 points with no retrace. Perfect example of how you can sell the weak, buy the strong, make a very, very effective trade in the currency market. This has been Boris Schlossberg. I wish you the best of luck. We're going to talk to you next week with more ideas. Take care.